One of the biggest mistakes that people make when doing Roth conversions is they withhold for taxes. I'll tell you why that's a mistake and what you should do instead. That and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Roth conversions, we use these strategies with clients all the time. It's the process of taking a look and saying, well, I'm in a low tax bracket today, my income's down today, or I think my income will be higher in the future because I expect to, we've had one individual staying at home with the kids and they're going to re-enter the workforce out there in the future, so our income's going to be higher. Or I'm in an entry-level position and I would expect, and I'm hustling and working hard to build skills and to build trust with my employer, and hopefully we'll be able to make more in the future. I think tax rates are going to go up in the future. I think I may be inheriting dollars. Mom and dad are getting up there in age and they've got some pre-tax dollars I'm going to be inheriting. So I think all these reasons, I think I'm in a low tax bracket today. I think I could be in a higher tax bracket in the future. I should do a Roth conversion. And I'm going to add one other idea on top of that is, hey, the stock market just dropped 20% or 25% or 30%. And yeah, I don't know if I'm in a low tax bracket today compared to what I'll be in the future, but I do know when I've kept composure, and I know whenever things inevitably rebound, even if they get worse before they get better, whenever they rebound, I want that rebound happening in a tax-free account. Therefore, I'm going to do a Roth conversion. Lots of reasons to consider doing a Roth conversion, so work with your certified financial planner. See if any of those reasons apply to you, or make sure that they're on watch for when they might. All right, so with that said, one of the biggest mistakes that we see with people when they do Roth conversions is that they withhold for taxes on the Roth conversion. You're certainly eligible and able to do that. All right, so I've made the decision. I'm going to do a Roth conversion of $50,000. I will, do that conversion, pulling $50,000 out of my IRA, withhold 12% for Fed taxes, 5% for state, or 20% for Fed, 5% for state, and the residual amount is what lands in your Roth IRA. The rest of it is sent in withholdings to the IRS. Now, at the surface, you might say, well, what's the mistake in that? It's taxable. Roth conversion is taxable, right? Yes, it is. It's whatever amount you do in the Roth conversion is going to land as income on your tax return. Okay, so then I have to pay tax on that money. Yep. Well, then I'm allowed to withhold on it, right? Yep. And you're telling me I shouldn't? Correct. I'm telling you, you shouldn't withhold on doing Roth conversions. That can be a pretty big mistake. Two primary reasons why. The first is, if you're not yet age 59 and a half, then doing a withholding on that Roth conversion means dollars have actually come out of your IRA or this retirement account before you're eligible. And that early withdrawal means those dollars are, yes, going to be taxed. Well, they all will, but then also be penalized as well. And so that's a needless and unnecessary additional cost or additional expense. So the reason, if you're thinking, well, wait a second, so does that mean you shouldn't do Roth conversions before age 59 and a half? No, it's allowed. And yeah, you should consider it if the circumstances apply, but don't withhold taxes. Gosh, or if you do, it should be the last resort, because any dollars that you withhold are going to be subject to that early withdrawal penalty. Here's the reason, if it doesn't quite make sense to you. Let's say you needed to get your hands on some money. You were in a dire financial situation and said, I need to get my hands on some money, but I'm not yet age 59 and a half, and I know if I pull dollars out, I'm going to have to pay tax and a 10% penalty. Is there a way to get around that 10% penalty? Oh, I'll do a Roth conversion of a big amount and I'll withhold 50%. I'll just withhold way more taxes than what I actually should withhold, and that'll give me a big refund, and that's how I'll be able to get my hands on some extra money. And so that's why, penalty would apply. So you want to avoid that. That's a big mistake. If you're age 59 and a half, don't withhold on your Roth conversion. But the other reason why it's a mistake to withhold on Roth conversions is the name of the game, or the goal with doing a Roth conversion is, I want to get as much money as possible growing tax-free. And therefore, if I convert 50 grand, I want as much, I'm paying tax on that 50 grand. I want as much of that 50 grand landing in that Roth IRA to grow tax-free as much of that as possible. And if I withhold, a total of 20% or something like that on for taxes, then I've paid tax on 50 and I've only got 40 grand showing up in my Roth IRA. So the name of the game, or the goal, the objective, wasn't fully accomplished. I didn't have as much money as actually possible land in that Roth IRA from that Roth conversion. Okay, so don't withhold on your Roth conversion, or at the very least, work it all out with your certified financial planner. Explore any other option, and last resort, I guess we'll need to withhold, and make sure that you understand the consequences. I would say that's the last resort, because do this instead. Yes, it's going to be taxable. The Roth conversion is going to be taxable, and you can work with your CFP and calculate, well, how much taxes it's going to create, and you can pay an estimate in as well. So pay taxes out of your cash or cash flow, whatever reserves in the bank, and pay that into the IRS or your state instead of having it withheld. This allows you to do that Roth conversion of 50 grand or 10 grand or whatever it is, and have that same amount land in the Roth IRA and able to grow tax-free forever. And instead, if you calculate, okay, that's going to be 10 grand of taxes or whatever, pull that from your bank account or pull that out of your savings or your cash reserves, and that's the amount that you would pay in an estimate to the IRS. If you look and say, I don't have that much in cash, and I still feel like really compelled, I should be doing this Roth conversion. Well, do you get a tax refund every year? Or could you structure it, if you don't have the cash, could you increase your tax withholdings right now in your paycheck and have a lot more paid in, and do it just enough Roth conversion to mean it would eat up your refund, instead of having, so you could still do the Roth conversion, not withhold anything, but then instead of getting the refund that you otherwise would, you've got that Roth conversion income landed on there, and that's going to mean you're going to break even, something like that. Those two techniques would allow you to not withhold on your Roth conversion. So if you're age 59, if you're younger than age 59 and a half, no issue, with that early withdrawal penalty. And two, it accomplishes the goal of having as much money as possible in that Roth IRA. Now, a couple tips with this. If you're doing that tax estimate, I would encourage, not encourage you, you're going to want to do those estimates in the same estimate quarter as you did the Roth conversion. Don't do the Roth conversion in the third quarter and pay the tax estimate in the fourth quarter. The IRS wants their money timely. It doesn't mean timely as each year. They want it matched up. And if you're doing withholdings, then it can be at any time. But if you're doing an estimate, they want you to align the income with that payment. Okay? And for this reason, it's important to know, well, what are those estimate quarters? Because they're not the calendar quarter. First quarter estimates are really from January until April 15. Second quarter is April 15 to June 15. That's right, just 2 months. Third quarter is June 15 to September 15, and fourth quarter is September 15 all the way until January 15 of the next year. And so if you're doing a Roth conversion because the stock market just dropped and it's April, then you're going to want to make a second quarter payment before June 15, right? So make sure you align your Roth conversion with that payment. And then second, when you're doing an estimate, make sure you're recording that and you communicate that to your CPA or to who's preparing your taxes. It would be logical that this team or this company that's been doing your taxes all these years, well, they would know. They would have a report or a printout from the IRS what you've paid in, right? Yeah, that would be logical. The IRS is not, it's not logical, guys. No, there is no payment, there's no confirmation of that. We can, as a CPA firm, tell our clients, all right, make these estimated payments each year. If they don't tell us they did, we have no record that they did or didn't, or paid more or paid less. We have no idea. So make sure you capture that for your records. Best way to do that, I would pay them online instead of writing an actual physical voucher. But yeah, there you have it. Doing a Roth conversion can make a lot of sense. Withholding on that Roth conversion often doesn't make sense, and there's a better way around it. Work with your CFP on that. This really emphasizes what we say in every video, every week, is making sure that you're looking at all 6 areas of your financial life when making decisions. You would think a Roth conversion, well, that's a tax planning decision, right? Yeah, but it's also an investment decision. Yeah, it is. Retirement decision, absolutely that too. It's a cash flow decision, present financial position. Do you have the cash or cash flow to come up with the tax payment, or do you need to withhold on it? So Work with your certified financial planner on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.